Hello and welcome to another update video about Ethereum. I think the forecast for the weekend was spot on, that we are dealing here with an Elliott Wave triangle. That could break any moment, to be honest. The expected direction from my side would be a break to the downside because, as explained before, first of all, we have possible wave 2 structure here, which started with this high that was printed on the 16th of April. And the wave 2 consists of an A wave, a B wave, and a C wave. In my opinion, at the moment, the best way to read this is to understand the B wave as an Elliott Wave triangle. Now, in this reading, it would be anticipated to break to the downside in a C wave. And that would be a 5-wave move to the downside, a possible diagonal pattern, so it will be choppy and unreliable to a degree. But relevant support levels that we're watching here on the way down are 1533, 1663 and 1754. What I cannot rule out is a higher B wave. So B waves can unfold as triangles. That typically happens on the weekend, which is why I made it my preferred choice for the weekend. So far the correct decision. But of course, it can always surprise and suddenly spike a little bit. If it breaks above the triangle, and we're going to take a look at what that means, then it has a good chance to rally into the standard Fibonacci retracement zone for a B wave. That would be between 1973 and 2067. Because we deal with a B wave, you need to understand there are no clear rules. B waves are very diverse, they vary a lot, and there isn't really a standard Fib retracement zone. I mean, there is one, but it's also not so standard. Okay, it's not so reliable. It's here between 1973 and 2067, between the 50% and the 78.6 retrace. But this can still change. You get overshooting B waves and all sorts of different stuff. So just be aware of that, right? With a B wave, we need to be on our toes. And but afterwards it would be anticipated to get that wave 2 down. That's the C wave in the wave 2. Now, it is of course possible to get a third wave rally directly. So I would generally be careful with shorts. We would then move higher directly in a third wave. I would be careful with shorts at the moment because the overall trend is up. So if we're now in a wave 2, yes, idea is that in a wave 2 we go a little lower, but overall, if we are in a wave 2, we know that we are in a larger impulse to the upside. So the wave 3 should follow, right? And that would be a move to the upside to take out the previous high, which was printed here on the 16th of April, around $2,140. Now, zooming into the detail, and in my first video today, I made a subwave structure count of this triangle. That so far is working out. It's adhering to it very nicely. I think it could be that the E wave is getting finished here shortly. But again, triangles morph quickly into different patterns. They can extend easily, no problem. If they do, that can take a little longer. But at the moment, the key level to the downside is 1876. If that level breaks, it would be a first indication the triangle breaks and fulfills its downside expectation. If we get a break above 1963, then the triangle will be invalidated and it would not be a triangle in this form. Bear in mind, triangles can always shape in size, so we can get a larger triangle, which does make it really difficult, this price action. But that's what I'm watching for, and I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.